Ever heard of RSI, moving averages, or SMA and EMA, but don't know how to use them? In this video, I'll explain the most popular crypto indicators and how they can help you make better trading decisions. Crypto indicators are tools used to analyze price movements and trends, helping traders predict future behavior. They're like road signs for the market, showing when to buy, sell, or hold. The RSI measures the speed and magnitude of price changes to identify overbought or oversold conditions. It ranges from 0 to 100. If the RSI is above 70, the asset might be overbought, meaning a pullback could happen. If it's below 30, the asset might be oversold, signaling a potential rebound. For example, if Bitcoin's RSI hits 80, it might be time to take profits. Moving averages smooth out price data to show the average price over a certain period, like 50 or 200 days. The simple moving average, or SMA, is great for spotting trends, while the exponential moving average, or EMA, reacts faster to recent price changes. For instance, if the 50-day EMA crosses above the 200-day EMA, it's a bullish signal often called the golden cross. The MACD shows the relationship between two moving averages and helps identify momentum shifts. When the MACD line crosses above the signal line, it's a buy signal. When it crosses below, it's a sell signal. Traders use MACD to confirm trends or spot reversals. Volume measures how much of an asset is being traded. High volume often confirms strong trends, while low volume can signal weak movements. Indicators like RSI, moving averages, and MACD are powerful tools when used correctly. Start with one or two and practice before adding more to your strategy. What's your favorite crypto indicator? Let me know in the comments. Don't forget to like, subscribe, and stay tuned for more trading tips.